Okay, question 17. So what I've done is it's slightly a busy question, but it's a great question for revising. And and so what I've done is I've put it, if you like, on sort of a spreadsheet, sorry, on a PowerPoint sort of deal with question 17. And it says that you have Bess proves the accuracy of her sales and purchases ledger. So what this means is that, as I discussed, we have three ledgers, right? We have the general ledger, which has the accounts we actually need to prepare our accounts in. And then we have two other ledgers, the sales ledger and the purchases ledger. The sales ledger is also referred to as a trade receivables ledger, and the purchases ledger is also referred to as the trade payables ledger. So these are actually balance sheet accounts. So these are debtors, and these are individual accounts of debtors, and these are individual accounts of suppliers. Right? Okay, great. So we have this. So typically, the double entry um, proves the accuracy by preparing monthly control accounts. So the control accounts live in the general ledger. So and that's what we typically will see. So we will have a purchase ledger control account and a sales ledger control account, and then they want you to sort of play around with this and sort of see what's going on. Right. Um, so they give you the opening balances, and it's very possible to have a credit balance on a ledger control account that's unusual. So, for example, the sales ledger control account should really most of the time only have a debit balance. I mean, it is trade receivables, right? It's an asset, so it's not unusual. The reason why you will have a credit on a sales ledger control account is because typically you might have a client who's overpaid. So it's important to sort of see how that arises, right? So here you have trade receivables, sales. You sell something to somebody for £100, no problem. Now imagine they send you a check for £120. So that's bank. They send you a check for £120. What ends up happening is when you do the carry down, you're going to have 20 here. And when you do the brought down, you have 20. So in effect, you owe that person £20. So the way this typically now occurs is that you now say, well, they'll now call you and say, listen, we paid too much. So what you then do is you give them a refund, right? So that naturally, when you see the expression refund, as we will see, you suddenly think, okay, then pay them £20 out of the bank and debit the trade receivables. So cash refunds will always be on the debit side of the receivables account, right? So that's one other thing that we don't tend to talk about. We talk about all the other things that we see in the trade receivables account, but the cash refund arises because you have put too much on the credit side on the trade receivables. Okay, great stuff. So that's kind of what's going on with that. And then again, like I say, literally just think the reverse. Just think the reverse for the purchase ledger control account. Literally, that we expect to see a heavy credit side, and we shouldn't really see anything. But here, this is the scenario where you have paid too much to your supplier. Okay, let's jump in. So let's and so here's all the information, but let's put those figures in first. So that's the sales ledger control account, and the question does tell us what those are. So the 188,360, 188,360, and 2140. 2140. And then it says here for the purchase ledger control account, you have 120, and here you have 89,410. 89,410. Right, okay. Right, so let's see what we have to play with. So I think what I'll do is I'll put in everything that we have here, and then we'll deal with the adjustments, right? So what do we have? We have credit sales. So if we're talking about credit sales, what you're saying is you're saying debit trade receivables, credit sales, right? That's what you're really saying. We're interested. This is the account we're interested. The sales ledger control account, right? That's what we're interested. So we have that. So it's going to be 101,260. I mean, to be fair, it's ironic because I actually think they do the work for you. I didn't even notice that. You don't even have to. You don't even have to. You just have to slot the figures in. Let's do that. I actually thought you had to. I think it's good to know where those figures are coming from. But 101,260. So it's done for us already. They actually do it for you. That's interesting. So just to show you, probably the examiner is not so much interested in the credit purchases. 68,420. 68,420. Right? We put that in. Then what do we have? Sales returns 9160. Sales returns 9160. Well, I mean, talking about why you just have to pull out the double entry for all of these, right? So the double entry of sales is in a sales account. This is in a sales returns account. And if you do the double entry, you'll see what's going on, right? Oops, sorry. Then you receive cash. Well, I am doing the question, so I'll leave it less theoretical and just oops, sorry, and just do it until we get to something that we need to really explain. So cash received from customers. So that's debit bank and credit the trade receivables, 91270. 91270. Then we have the cash paid to suppliers, 71,840. 71,840. Let me just see purchases returns. Purchases returns was 4280. 4280. Cash discount. Here we are. So this is this. Cash discounts allowed, 1430. Cash discounts received, 880. Irrecoverable debt written off, 460. Refunds to customers, which I have explained earlier on. Why, and you can see it's sitting here. The credit side is the bank. They literally give you all of it. I really thought, I mean, this is interesting. I really thought that they would even try and get you to think about what's going on. Contra settlements, 480. So they actually tell you. I think it's important that you keep revising and knowing why these things are on this side, because there's two of them. Contras, 480. Yeah, and those are the normal things until we look at the adjustments. Okay, right, great stuff. Then they tell us there's some adjustments that happen, right? And it says here that a contra settlement of 500 had not been included in the totals. So we need to, if you like, increase those contras by 500, like on both sides. We need to keep those contras, if you like, on both sides. That's that, right? Now there we are. So that's the first thing there. Now let me even see if they had gone ahead and adjusted that. So let's talk about what happened here. I think it's important in case for another question, you see. So it says that what's happened here is that a new employee has mistakenly entered 5 invoices into the purchase daybook as if they had been purchase invoices. So they're not. So it's to do with sales, but you've put them. So I mean, so if you remember, we said a purchase daybook. These are your diaries, and you have your sales daybook. So you've put in 5 invoices in here, and that's 1360. It tells you total amount, and it says that these amounts have been entered into new purchase ledger accounts. So you've also put them in your purchase ledger. Purchase ledger. But as far as your control account is concerned, your total, you see, because you put them in your purchase daybook, your total has this 1360 in there. It will, because you put them in, and you've taken that into the purchase ledger control account. So in truth, those figures, basically what you've done is you've done debit purchases, credit purchase ledger control account, right? So you can understand what's happening. And in these figures, we have this 1360. So both these figures are too high by 1360 because you've put in you have an error of original entry. So you need to take them out. So technically, because I can see what's going on. Technically, what if I was doing double entry? I'll just change my pen color. I would credit purchase ledger control account and sorry, debit purchase ledger control account and credit purchases, and that would get rid of that 1360, right? From that, this is how you would do it. So in effect, if I put 1360 here, I mean, I feel like they've not given me space to do it. So they haven't, ordinarily I'd put the 1360 here. So technically you could just subtract the 1360 from here. I mean, you could, it's the same thing. The way this is laid out, I would really create another line and put it here. But hey, I think the key point is understanding that this figure, which is this thing, has to reduce by 1360. It's too high. And the opposite side of this 1360 would be in the purchases account. And then, but also it tells you that it's related to sales. So really, I have revenue or sales and trade receivables low. So I have here credit sales, debit trade receivables. These figures are too low, and they should be higher by 1360 because they are related to sales. So I need to add in a 1360, or in effect debit the trade receivables account, but I don't seem to have anything, a space for it. I thought these T accounts were actually blank when I started doing this. And I then need to credit the sales account if I was given one. I'm not given one, but that's what you would do. So basically beef it up with another 1360. Right? And there you are. There you have that. Now, and that's how you deal with that. So hopefully that's clear. You can see where we're going with this. Right. Let's look at the last one. Then the last point is rather interesting. I had to spend some time myself just getting my head around it. And hopefully your exam isn't riddled with too many of these. Hopefully you have nice, simple ones. But even if you have, even if it's one or two, it's not the end of the world. So what we have here is an interesting scenario where we have a case where you had, let's just get a clean page. Let's just use this page here. Sorry, I can't even clean that up. That's fine. Let's have a scenario here. So let me create the scenario so you can sort of see get you thinking about it, to get you prepped all the time for this type of thing. Imagine, I'm just going to create a scenario here. Imagine that you had sold some goods to someone for £100. So let's call that sales, right? £100. And the person had sent you £120, if you like, and let's call this bank or whatever. You've received 120, but they only really should have sent you 100, right? Because that's what you sold goods to them for, at 100. So they have overpaid you by 20. That's really the point here. So the question says that what you then decided to do, no problem, was this could have been petty cash. I don't know, but I suspect it isn't, because I suspect what's happened is you've said, maybe the customer's coming to your office, because the question does say that you've decided to pay out of petty cash. So you have some money in petty cash. You probably go and recognize it later in bank. But the point is, you've gone and said, listen, I'll pay you £20 out of here. And that's what you've done. So technically, you've credited petty cash. And the question really, what you should do in simplicity is just debit the trade receivable. That's all you should have done. If you so credit this and or credit bank, it doesn't really matter, petty cash or bank, and debit the trade receivable, right? And that would be the end of it. Now let's look at what you actually did. I think that's kind of the important thing. So the question says that this £20 refund was made out of petty cash and has not been included in the summary of transactions. So we haven't put it in yet. So we need to go in and do it. So I haven't done 20 here and I haven't done the 20 here. I just haven't done it. That's what I should have done. That's why they give you the option to do it here, right? So sort of fix it. But let's now see what you then went and did. So it says the £20 was entered in the sales ledger as if it had been a cash receipt from the customer. So let's see what that looks like. So what actually happened here was that in your sales ledger, you remember these are totals. You'd have had the individual customer. Let's just call this person individual A. And we have exactly the same scenario here of 100, which is the goods we sold to them. We have exactly the same scenario of us recording the fact that The person has paid 120. So what should have happened was, just as the same way that we would have 20 here, we should have 20 here, right? Just the same sort of, because they're mirrors. This is a mirror of this. But what you've done is, it says you've put 20 here. That's why the question goes on to say that you have, and this has resulted in a 40 credit balance in the account. The reason you're having a 40 credit in the account is because this is 140 together, this is 100, because you put the 20 in the wrong place. So you need to adjust the sales ledger to sort of fix this, right? So probably you have a suspense account somewhere. The examiner is not telling us. But the point here is that to fix this sales ledger, I'm going to have to kind of, first of all, correct this 20 to some kind of suspense account, because you basically have two credits, right? You have credit on the account and you have another credit. So you have a suspense account somewhere. So as far as this is account, I'm going to debit this account 20 to fix the first error. Let's just call this a suspense account, suspense account somewhere. And then I'm going to have to then put in another 20. Oh, sorry, put in another 20 to actually do what I'm supposed to do, right? So first of all, the first 20 rebalances everything, and I put another 20 in to do what I'm supposed to do, right? So in the end, you will end up putting 40 through to kind of deal with the clearing out that person's account, right? Because ultimately, he doesn't owe us any more money. And that's how we deal with that. So it was a slightly, I thought, a tough question, which is why I've used the red pen to sort of show it's telling you fix what happened first. It's slightly tricky. Yes, it is your harder question, but you will still have passed easily because it's a really tough question. So the examiner's not expecting you to know all that naturally. And again, it's a Kaplan. And Kaplan are very good. They ask some tough questions. Right, and then we add everything through. Um, so just because of time, what I'm not going to do is add everything through. I'm just going to go straight to the answers to get the balances carried down just because of time. Let's just come out of here. Let's keep all of this. And let's go and look at the answers and sort of just use that to verify what I've just said, because I don't want to add wrong. And that's everything we said. They literally gave you everything, didn't they? Bang, bang, the cash refunds. That's the 20. And that's the balance carried down, right? Which is the difference here. And you'll also have a balance carried down over over here. Now, of course, this balance carried down over here, right, has come to us, if you like, from this knowledge. So, like I said, because we have fixed, so slightly tricky question, because we've fixed this sort of issue here with the sales ledger. Because we know this is what has affected. We know this is our closing balance for the sales ledger. The sales ledger 3320, because we've fixed that problem that I talked about. That's the 40, the wrong way around adjustment of £20 refund. So we know the closing balance, if you like, on the credit side of the sales ledger control account, or the balancing sort of the figure here is 3320, and then we fix that, and as a result of everything else, we also know that this is going to be if you like, the difference between, now that we've put this in, we now know that this is the other difference that occurs naturally, if you like, right? That occurs naturally in there. Yeah, and that's that one. And then with our purchase ledger control account, we started everything, we put everything in, and then we now know that the balance carried down. Remember, we only had opening balances, right? And well, the 90 had always stayed the same. There were no issues there with the 90. You have here the purchase ledger balance at 90. So at the end of the month, right, we're told at the 30th of September. So we just needed to adjust this, fix this. These two, when it says to be ascertained, that's what you're finding out by comparing both sides. But you're given what those closing balances are. So you're given the 90 already. It's given to you. So you're just fitting that in. You're just fitting that 90 in because it's a brought down figure, isn't it? So the fact that it's a brought down figure means that it's a carried down on this side, and then you work out the difference by comparing both sides like you would normally balance carried down. And in the same way, we're given this, but we're given 3360. We just needed to fix it, and we're given this, and then we work this out. So that's what it means by to be ascertained. The fact that you have to actually calculate this figure yourself by now comparing the left side to all of that. Same thing here. Now comparing all of this to all of this. So slightly tricky question, big question, but I think it's a good one to practice. But you're not, I doubt, going to see anything as tough as that. But it's good you practice it. Cool, great stuff. And that's question 17.